Good morning. This is Japanese Economic Review Channel. Today, we reflect on the market events of yesterday, Friday, April 17th, 2026. It was a day defined by a stark divergence in global sentiment. While US tech euphoria reached new heights, the Tokyo market faced a significant hangover after hitting record highs earlier in the week. We will examine the macroeconomic and technical forces that polarized these two major markets. Yesterday's indicators told two very different stories. The Nikkei 225 plunged by 1,042 points, closing at 58,475 and snapping its four-day winning streak. Over 1,000 stocks on the prime market declined. Conversely, the Nasdaq recorded its 12th consecutive gain, its longest streak in nearly 17 years. Meanwhile, the yen remained weak, trading near the 159.40 level, adding pressure to the domestic context. The momentum in the US was driven by two powerful tailwinds. First, geopolitical optimism, fueled by potential US-Iran peace talks, bolstered market confidence. Second, the TSMC effect. Strong earnings from the semiconductor giant sparked sustained buying in the tech sector. These factors pushed the S&P 500 and Nasdaq to consecutive record highs, benefiting companies like AMD and Intel. The Nikkei's trajectory yesterday was a lesson in technical exhaustion. After hitting a new all-time high on April 16, the morning session of April 17 saw immediate profit-taking due to high-price caution. By the afternoon, the weekend factor accelerated the decline as buyers stayed on the sidelines. This led to a weak close at the absolute low of the day, with trading value hitting 7.5 trillion yen. The sell-off was indiscriminate across heavy industries, with 29 out of 33 sectors ending lower. Major declines were seen in non-ferrous metals, Mitsubishi Materials, machinery, Daikin, and financials, Nomura. However, defensive safe havens emerged in the services sector, including Recruit Holdings and Baycurrent, while consumer-facing brands like Nintendo and Toppin managed to buck the downward trend. The Growth Market 250 index also succumbed to profit-taking, mirroring the prime market's caution. We saw downward pressure on names like PowerX and ACSL. A notable exception was the IPO market, where Seiwa Holdings surged significantly upon its listing. In corporate news, strategic moves such as the J-Stream and Sakura Internet collaboration highlight ongoing efforts to strengthen domestic business foundations. The Growth Market 250 index also succumbed to profit-taking, mirroring the prime market's caution. We saw downward pressure on names like PowerX and ACSL. A notable exception was the IPO market, where Seiwa Holdings surged significantly upon its listing. In corporate news, strategic moves such as the J-Stream and Sakura Internet collaboration highlight ongoing efforts to strengthen domestic business foundations. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.